Hey, this is Jose Blasco. How are you, everybody? This is a sound check. We are about to start. Please, a quick hello on the chat box would confirm that you hear me well, and therefore we're ready to get started. So please go ahead and say hello. That would be appreciated. So I know we are well connected. Everything is looking good, but just in case, always good to have an extra confirmation. I will also position myself on the bottom right of the corner. How are you, my friends? Good to see you. It's time to get started, isn't it? So we are now live. Time to begin the session. Thank you for the confirmations. How are you, Gary? Good to see you, everyone. So let's begin. December 17, 2020. Welcome to the session. Today it's options with options. So we're going to be looking at the options markets, obviously. As the name suggests, it's quite obvious. But the beauty is that, as the name suggests, options give you options. And therefore, we're going to be looking at different types of opportunities depending on what the market makes available for us. Sometimes the market will make available opportunities which we call directional. Sometimes the opportunities will be non-directional, etc., etc. So we're going to be looking at all of these and adapting to what the market has to provide. So we always act mechanically with the odds in our favor. Emotions on the side. We're emotional beings, obviously, but we have to get those under control. So our decisions are rule-based, mechanical. So we produce consistent action to produce consistent result. This is the life of a trader, isn't it? Nothing new if you have been attending the sessions for a while. But anyway, before we start, I will like to highlight the disclaimer. Please take a moment to read it carefully. This is important information. So please read it all. It's just a few sentences. So let's have the focus on the disclaimer right now. So you are well informed. This is a financial presentation, obviously, and therefore there is risk involved. So it's important for you to read it. Okay? How are you? Good to see you, Joe. Very nice, everyone. Very good. Perfect. Okay, so the session is now officially introduced. We're ready to start. And here is our beautiful TradeStation. And let's begin. Okay, so the first thing that we're going to do, as we normally do, is we'll look at the market. We'll look at the S&P and the VIX to understand what's happening out there, so we understand the market environment in which we trade. Second, we'll look at a collection of trades that we have running. I have them here to be reviewed: Roku, Tesla, CNC, and Intel Corporation. So we'll look at those trades and see what's happening. For the ones of you that are in those trades, I guess you will appreciate instructions that could be given when it comes to rules to follow for trade management purposes. For the ones of you that are not in those trades, still, that should be useful, because the moment you see other trades running, you will understand better the third part of the session today, which is when I start looking for new opportunities. So you will understand better the rationale of the opportunities I'm looking for by looking at other trades that are doing just that already. And therefore, we are killing multiple birds in one stone. Okay? So efficiency first. Very good. What else? Yeah, so that's it. So looking at the markets, looking at the trades that we have running, and then looking for new market opportunities. So the market. So what's going on with the market? Well, let's look at auto climate. This is the S&P ETF SPY. So we are in a confirmed climate to the upside. This is candle number 2 of what statistics suggest a normal thing to happen would be 10 candles, moving up in this particular climate, right? In other words, the market is more likely going to continue moving up than changing direction. Okay, that's what we have. We had a case, some time ago, we had a case where the market was overstretching a little bit, but notice that we got a little bit of a pause. So from a probability standpoint, everything resets, and we are now in second candle in a potential continuation of this move up. On top of that, we can see new UFOs show up. Actually, today, one UFO showed up. So, fresh and, just coming out of the oven, orders that are being added to the market, and definitely this should lead to continuation to the upside, unless, of course, something happened. And this is what happens with probabilities. Probabilities tells you what's more likely to happen, but it's not a guarantee, as we all know. So maybe some crazy news is going to be reported, and next thing you know, orders are going to be canceled, and actually even worse, the opposite orders are going to be added, and next thing you know, the climate will cancel and start a down climate unexpectedly, very powerful to the downside, like that case, for example. Okay, so we should always have risk management in place just in case. While it's good to be confident of what we do, and we need to be confident of what we do, we never want to be overconfident or just think that okay, that one for sure I'm going to make money, because that mentality it's very much of a retail non-professional type of mentality. And as traders, really, we simply don't care. We have a carefree state of mind. We don't care if a trade makes money or loses money. We just run a portfolio with multiple trades, knowing that some will make, some will lose. And the goal is to manage those trades. So when we profit more than when we lose. And ideally, we profit more often than when we lose too. And the two things together will help the accounts to grow. Okay. And we don't need to be emotionally attached or brag about our trades or be, overprotective of our trades or anything like that. Okay. So, but again, this is the market environment in which we are, where it is looking like the market will continue going higher for a bit longer. Okay. Also, looking at the VIX, notice how the VIX went down 22.17. So the VIX is getting cheaper. The cheaper it gets, the calmer everything is out there. We are entering holiday season. Okay, so another thing that could be interesting to see, and that I'm gonna do it looking at the daily time frame. Okay, so I'm just gonna add, even though this is something I normally don't do, but I just want to do it for just to be visual in today's session. So notice what we see, okay, when it comes to the volume. So I'm not saying that there is a clear drop in volume, but it does look like a little bit. I mean, these things could happen any other time. Okay, well, that was the summer. Okay, here it was maybe a little down. Okay, but I would say that there is a little bit of a tendency here, or it looks like there is a tendency where volume may go down, which I will not be surprised given the fact that we are entering the holiday season. Okay, and so what does that mean? Well, that means that this up movement to the upside may be quite shy. Maybe the market is going to range a bit until the new year starts, or more people are using the vaccines, and the world gets to understand what's the impact of that. So again, it's kind of all coming together, change of years, people using vaccines, holiday season. So I will not be surprised to see some volume dropping, some less volatility, less market movement happening out there. And I believe that I'm not the only one with those thoughts, because when we look at the VIX, we can see that the prices of options are going down. And the reason why the prices of options are going down is because less people are buying them. Okay, and why less people are buying them? Well, because less people expect much to happen. So from an opportunity or risk point of view, there is less people buying options, either for speculation or for hedging. In both cases, there are less, and that's why we get to see the VIX go down. Okay, now having said that, we just hit a green UFO, but it's the only one on the chart where look at how many red UFOs there are. So all of this is certainly pointing at the market moving higher, and if any, ranging. It could be wild swings, maybe like a few percent up, few percent down. But if the market was to rally much, okay, we need to fall. And if the market was to fall much, with all those red UFOs on the VIX, you would expect the market to come back up. So that's what we have in the marketplace right now. So kind of. The instruction, if you wish, of the market environment really is not changed much during the year. I mean, it's changed much from a point of view of the volatility figures, that reach 40 at some point during the year. So yeah, that's changed a lot. That's 22 now, so that's half. So that's a big change. But at the same time, if you were to look at the sessions that we did on those dates, you would also understand, the auto climate combined with the VIX and all of those things, and basically. The instruction I was giving you in those times earlier in the year were very similar to what I'm about to say now, which is we need to have a diversified portfolio. We cannot be extremely loaded on directional only or extremely loaded on non-directional only, because really the market situation we have is while I suggested the market is maybe is not going to do much, there are definitely stocks that are making all-time high. For example, Roku is a great example. We have this trade. Okay, so I'll switch and look at Roku. So that stock started making all-time high and it's kind of going to the moon. So while the whole market may be quiet, okay, we may get to see other stocks that do start, picking up direction and a lot of speed of movement. So let's position ourselves, if we find those opportunities, to make money on direction, while ideally, we also find a few non-directional opportunities. So if the market's going to be ranging and most of those stocks are not going to move that much, so at least we're going to make money on time decay too. Okay, so we always have multiple reasons to be properly diversified, but I also like to justify different reasons in specific times. Okay, as a rule of thumb, you always want to be diversified, and what I mean by diversification, I mean based on strategies. I don't mean buy 25 stocks. I mean based on strategies. So some strategies pointing up, some strategies pointing down, some strategies to be non-directional. That's what I'm talking about when it comes to being diversified. I'm not talking about diversification from a consumer of mutual fund of unit trust point of view, which is a very retail mentality. Okay. Anyway, so with all of this said, let's begin with reviewing Roku. Okay, and we can see that Roku it's doing its thing. Last time that we were in the session last week, we decided to move Roku stop to 297. I'm calling this a stop. It's not a stop, really, it's an alert because we are long the 260 call that expires in January. So we are not. We are not using a stop here. But if Roku was to fall instead of rallying and was to hit 297, then you would want to receive an email and then go ahead, an email or a pop-up, or like if you use TradingView, for example, you have pop-up alerts on your phone. So that's ideal. Plus the alerts are on the server side. So even if your computer is off, the alerts work. So, I would certainly suggest to do something like that. But basically, when you get to 297, you get alerted, and then you go ahead and you close the trade manually. Why manually? Because, with options, typically you got spread issues or liquidity issues, I should say. And therefore, sometimes you may have a little bit of a wide bid-ask spread, especially when an option is so deep in the money, right? Or so deep out of the money in both cases. So liquidity gets pretty bad, and it's always better to go ahead and either to get hard deltas against soft deltas with shares against options, or go ahead and close the trade manually by trying to shave the spread and get hurt little on the way out. So that's why I'm talking about an alert instead of a stop. Okay, so now what happens since the last week to today, we have a new UFO that formed there located at 320. So I'm just gonna go ahead and move that line to 320. Okay, and definitely, guys, I believe this is one of the most beautiful trades that we had in the whole 2020. This is not, let's call it not a normal trade, because the move since we entered is basically a straight line. Okay, the little corrections that stock is showing are really minor compared to the angle that we can see on the way up. So this is really, not a normal thing that a trade works so amazingly well. But again, this is what we do in trading. You keep entering trades, pointing at multiple directions, and most of the trades will provide, let's call it an average performance, where sometimes you will have these amazing performances, and as you keep doing that, multiple times a week throughout the year. So definitely a few times a year, you should pick one of those. Okay. So this is the one that we have running at the moment. Okay, so Roku is now updated with a new location for the stop, or the alert, I should say. So if you are in this trade, that's your instruction, my friends, assuming that you are with me on that rule. Tesla is another trade that we have in. Okay. Also working very well. We have two versions of this trade. So let me move some of the drawings here so everybody understands. So one of the trades that we have is expiring on December 18, which is tomorrow. Okay. And as long as we stay above 445, this trade will profit. Well, we are currently trading at 638. So it's like $200 above the price we selected. So it's almost a sure thing that trade will be profitable tomorrow. Again, there is nothing sure thing in the market, but really, I guess you are with me if I was to make such a statement. It's not an absolute statement, but really, it would be quite a crazy thing to see Tesla fall $200 in one day. It would be close to really impossible, right? So that's why I'm saying that this trade is very, very likely going to be a full profit, even though we'll review that next week. Okay, now, if I was to look at the probabilities, okay, just out of showing it to you here properly. So we have here 18, okay, of December. And if I uncheck the other one and I only check 18 of December, notice that probabilities suggest that the lower Tesla will drop is 593. Okay, so 593 is kind of like here. Okay, kind of like here. And that's how low Tesla could go, where as long as we stay above 445, that trade will be profitable. So it's looking very, very good. If you are on the other trade, which is using December 31st, then probabilities are suggesting 535, okay, which is lower, but still much higher, somewhere there, much higher compared to the 445 value. Again, that is if you use December 31st. So in both cases, both trades look very good, and there's nothing to do really on those credit spreads. Everything is good. I mean, you may have a rule to close the spread for X amount of premium, but again, if you haven't done it yet, given the fact that we are like 200 above those prices, you will probably suffer big problems with liquidity and slippage. I can show you that here. So if we look at the 445 on Tesla, you may not be able to exit at all. That's why you have to wait until tomorrow. So looking at the 445, getting there, almost there, here we go. So 445, okay, well, actually it's not so bad. We got 20 to 27, so it's 24 cents. So yeah, so you should be able to exit this trade with a, let's call it a limited amount of pain, 7 cents for one of the options. You got two. So again, given how far you are, if you haven't exited yet, I would say it's a better choice to let those options expire, and that's it. Okay, cool. CNC, that's a trade that we planned last week as well, and that one is not a trade that we entered last week. It's a trade that we planned last week, expecting price to come back. And if it was to come back, we would enter the trade. So you can see the vertical line that was 10 of December, that was last Thursday. And what we said on that day, price was more or less here. And we said, okay, if price come to that UFO, get into the trade, because we will expect the climate to propagate, okay, and that stock to fall, okay? Well, guess what? The intensity on the drop was so intense, which means that the stock just kept dropping and never came back. In other words, this trade is a trade that we did plan together, but I'm just going to remove it from the list because it's not a trade that met our entry at any moment in time, and therefore, if you followed the rules I gave you, then you could not execute it. So I'm just going to remove it from the list. And the last one I'm going to review is the one with Intel, which I believe many of you are in this trade, at least based on emails that you have sent. And I believe you're pretty happy with it, right? Because what we did last week was to fully remove the risk of the trade. So when we entered this trade, we had a particular approach to trading that was a long-term investment opportunity in this case. And we said that we were going to do 2 credit spreads to get premium and in exchange buy a call. So if this thing was to move immediately, we would make money immediately. And if it was to fall, we wanted to be put shares of Intel at that particular price, which is $40 per share, coinciding with the UFOs. Well, it never felt. And by the way, we did that, in case you were not around at the time, we did that during the US election when volatility was around 38.40. And therefore, we had such an advantageous trade where we could do this trade instead of for free. We actually did it for a credit of $60. So we were paid to do that. And on the last Thursday, we were able to remove the short puts. Okay, we were able to close the short puts. So the risk of the trade was totally eliminated. I believe we paid 20 cents to get rid of the puts. So in other words, we are still keeping 40 cents of credit. And worst case, we make 40. And on top of that, we cannot lose anymore. So that was a risk-free trade. But not only we did that, we also dropped to the daily time frame. We found that particular UFO there, and we decided to set, just like with the case of Roku, we set an alert at 47.24. Okay. Now, during the progression of this week, okay, it could have been that a UFO had formed. Let me do that again. A UFO had formed somewhere around this level. Okay, it could have been, but it's not been the case. Okay, it's not been the case. Therefore, what do? Well, nothing. We just wait and keep enjoying the move. That stock is in an up climate. 3 out of 6. So again, it should keep pushing higher. And if it pushes higher, a UFO will form and will move that red line higher. In the daily time frame, notice I'm not doing that in the 55-minute time frame because the Intel trade was a long-term investment. It was not an active trade. It was taking advantage of the US election. which is a unique event. Okay, cool. Okay, so with all of that review, hopefully this is helpful, especially for the ones of you in those trades. Um, Probably puts a smile on your face as well. I mean, it's not always like that. We also take losses, guys. In this case, the trades that we have are working well, but there have been other times, and you can just go ahead and watch recordings in the YouTube channel, and you will see as well cases where we had to take losses. Okay, and it's part of trading for sure. But anyway, it's time now to get into the opportunities found by the scanner, so we can begin identifying new opportunities to be executed, assuming the rules will be met. Okay, so I'll start with Costco. Okay, Costco is reporting earnings on March 4. You can see this in the bottom part here. So that way, we got plenty of days to choose from. Costco has 54% probability. If I use regular session data, if I use pre and post market, that drops to 42%. And that is not relevant because for non-directional trades, which I have selected here from the scanner, for non-directional trades, we always want a minimum of 48%. Okay, so 42 does not meet the rule, and therefore I'm going to move to regular session. Okay, and that is moving us to 54%, which is ideal. Okay, now before I keep going, I do have a problem. So if I set an iron condor, a non-directional trade using 2 UFOs above and 2 UFOs below, which is one of the rules we have. Okay, my problem, as you can see, is that the current price is located nearer to the upper part of what this range would be, versus if I was to project that distance below. Okay, notice how much space there is here to get to my 338. So in other words, the only way to build this trade in a proper way, and still I would not be so happy, would be to build not an iron condor, but build what is known in the industry as a broken wing iron condor, which sounds very sophisticated and sounds very cool to pronounce. Sounds very scary too if you're new to options. It's nothing that difficult, but as I said, it doesn't put you at a clear advantage for these type of trades. And therefore, I'm just gonna save a little bit of time and pass and go check if Lulu gives us a more balanced setup, and go try to plan the trade there. Okay, now first we got a problem there with 45%. Remember, we need at least 48. So I'm going to move to pre and post market, and that's 38%, which is not acceptable. So I'm going to move to if, which is 44%. And if I look at regular session, it becomes 52%, and that is good. Okay, 52% is good. And I do have a bunch of UFOs above and below. And if I was to look at earnings, okay, we are talking about February 10, which is like 2 months over from now. So I can certainly use many different expiration dates. Okay, so that's good. Okay, now that stock, if I'm not sure about this liquidity, we may get disappointed, and if it's not liquid enough, then we may have to pass. Certainly, the fact that we only have monthly expiration dates, it's not showing any weekly expiration date. Everything is monthly. It's a very bad sign. Okay, it's a very bad sign. That probably means that we are lacking liquidity. So very quickly, before I even spend time on the chart, I'm going to look at January 15, and I'm just going to go ahead and say we're going to discard this trade. 2 reasons. Reason number 1, the distance between bid and ask, as you can see, is kind of double the price, so it's crazy. And then on top of that, the distance between strikes is $5, which means that not only you would be killed on the spread, on top of that, the minimum risk that we will be able to accomplish on this trade is $500, which I'm not saying it's that much in one hand, but in the other hand, I try to put myself in the shoes of everyone in the group, and I would believe that many of you are in learning stages, and probably in learning stages, even if your account is large, you may prefer to utilize trades of a lesser risk at first while you're learning. Okay, and in this sense, lack of liquidity, being killed on slippage, and high risk, well, it's something for me to pass on. Okay. Fastly, 48%, that's fine. What if we look at pre and post market? We got 45%, so that's not fine. Now, the problem I see here is that it's only one UFO. Okay, and by the way, when we do the sessions, you will hear me pronounce the word problem many, many times. It's not like I am a negative person or anything like that. It's just that when I'm trading, my mindset is always in a very skeptical mode. I'm always looking for problems, because if I see problems, that means less probability. So I'm looking for problems, and if problems are there, then I'll pass on the trade. My job is to discard trades more often than the time when I accept trades. My job is to trade, but only to trade high probability. Okay, so you will hear me say problems many, many times, and make sure you develop a healthily skeptical mindset when you trade. You don't want to accept every single trade, because if you trade quantity, it means that you don't trade quality, right? And the approach would be to look for quality, meaning higher opportunity, higher probability trades. Okay. So what's the problem? Well, the problem I see, at least in this screen, is that I only see one red UFO. Was that a problem? Why is that a problem? Because we have a rule that says we need a minimum of 2 UFOs above and 2 UFOs below. Now, do I know for sure that there are no more UFOs above? No, I don't know. But since many markets are making all-time highs nowadays, that may be the case of that stock. So what is one easy way to do that is switch to a monthly time frame. And as you can see, this is a pretty new stock. There are not too many candles on the chart, isn't it? And you can see here that the top candle is right there, okay, which is basically 127 or something like that, which is, the top, 130 actually, which is the top that we can see here on our screen. Therefore, there is only one red UFO. Okay, so no trade. So we'll move to NEE, NEE. And with that one, we have 54% probabilities. That is good. What if we switch to pre and post market? So we got 40. That is not good. So we'll stick with regular session. And again, if I was to use the word problem, right? So you get my point. So only one UFO. So let me check monthly time frame. Yeah, same story. So that peak, that week is all times high. And given the fact that on the 55-minute time frame there is only one UFO, then it's very simple. I don't have permission to do any trade on that stock. Even though 54% probabilities is pretty nice, I don't have permission. Okay. What about Oracle? So Oracle also have 54%, and again, it's looking like it's going to the moon. Is it making all-time high? Yes. So because it's making all-time high, so again, we have a similar situation to other stocks I discussed before. We don't have those 2 UFOs above and 2 UFOs below. You see, that's a difference compared to earlier in the year. After the relevant crash that we had earlier in the year, many stocks were showing many UFOs above and below. And we had great trades throughout the year that were non-directional. But what's happening? The market has changed. The market now is making all-time high. The VIX is lower, making the options cheaper. And on top of that, many stocks are pointing very strongly to another direction. So that reduces the amount of opportunities that we see on our scanner to 6 in the case of non-directional. If you watch some of the recordings, or you were in our sessions live earlier in the year, you would see that we had many stocks in this list, okay? And what was actually very difficult to find were stocks to go long, okay? Where now, if you look at stocks to go long, we have more, okay? Also, stocks to go short, we only have 2, okay? And why is that? Well, because, the broad market is in an up climate, so most of the stocks are in an up climate too. And therefore, you find less opportunities. So it's important. We are meeting once a week here in the channel, but it's important that when you do this for yourself, you look at this, I would say, once a day. Maybe if you work and you look at the markets in the evening, if you're in the US, or maybe you don't work, maybe you're retired and you look at the markets during market hours, whatever. Everybody's in a different situation. But I would say that once a day is a healthy approach, because that way every day you give yourself the opportunity to catch a long, catch a short, catch a non-directional. And the fact that one day you may have no trades, it doesn't mean there are no trades. You look at it again 5 hours later or tomorrow, and then you find a trade and you execute. And therefore, little by little, that list starts growing. Okay, by meeting once a week, 45 minutes in the channel, I got 3 trades running. Imagine if we were to do that every day. So I would be running, let's call it 15 trades, okay? Because it would be 3 times 5. So now I would have 15 trades in my portfolio doing something for me. So it's not that complicated, okay? But at the same time, it does require persistence, perseverance from you guys, okay? So very good. So let's go ahead and I'm going to start with the short ones, okay? And the reason why I'm going to start with the short ones, it's because we already got Roku pointing to the upside, Tesla pointing to the upside, Intel pointing to the upside. So again, this is just an account I utilize for the sessions. So it will be okay for me to plan another long. But I'm going to pretend that this is what I have in my account right now. And meaning this is the only thing I have in my account right now. That's what I meant to say. And therefore, I need to balance that portfolio. I already tried to find non-directional trades and I didn't find any. So what would be my next step? Well, my next step would be to look at short opportunities, which I would enter, where, again, the likelihood for the trades to profit is less because the whole broad market, S&P and so on, is pointing up. But if the whole market was to turn, then what would happen is that those stocks would suffer. And they will not suffer like for losses because they are in the green. And worst case, I'll hit my alerts and I'll exit the trades for a profit. But they will still get hurt a little bit by defining hurt, losing a little bit of the profitability. Okay, they will not go to the red territory, but you will lose some of the green. So in order to offset that, getting into some short position is great. You are likely going to lose with a short position, or more likely going to lose with a short position. But if the market was to fall, that short position would act as a hedge, offsetting the problems from the other stocks. Okay, that's the idea. So let's begin with KR, and let's see if that particular stock is going to meet our rules. Our rules are demanding because the first thing that we need to find out stocks with probabilities of 50% or above. So we have PD on the upper left, which means that data is pending. So pending data is being downloaded as we speak. So I'm going to have to wait to get to see those probabilities. I'll take a sip in the meantime. Thank you for that. So we have 53% probability, okay, which is more than 50%, and that opens the door for us to do the trade. Okay, now, unfortunately, when looking at auto climate, for that stock, oh, sorry, I just froze the screen in the wrong location. Here we go. So for auto climate for that particular stock, while the climate is confirmed, pointing down, the problem I have is that it's been moving in a direction for 11 candles, where statistics suggest 5 is a normal thing to happen. Meaning 11 is definitely not a normal thing to happen. It's unlikely, and could it go to 20 or 30? Of course, it could. Anything could happen, but it would be more reasonable for that market to turn and start showing blue, maybe just for a few candles, and then continue the red. But entering right now short, it's not an idea, okay, or an action that meets our rules, okay? So in that sense, I'm going to pass, and therefore I'm going to look at CWH. And CWH, from a climate point of view, so I'll start there, is indeed giving us what we need, okay? Because notice how the climate is confirmed, okay? And right after a pause, we are now candle number 1 out of what stats suggest 6 is a normal thing to happen. So if you enter now, okay, and everything else in the method is meeting the rules, so we are likely going to see something to happen for us, and something that not only is going to happen for a little bit, but something that has a greater chance of lasting, okay? And we want our moves to last. The more the moves last, the more you make, correct? Unfortunately, and it's just by a little bit, we need 50% probability. This is providing 49.4. So that way I cannot accept. So I got one last chance for that stock, which is to switch from regular to pre and post market, which sometimes we get more probability. In this case, we got less, 38%. And therefore, almost there, but this stock does not meet our rules and we cannot take the trade, okay? So you can always go ahead and rerun the scan, and maybe now you have a few new opportunities, and now you can go ahead and trade them. But based on the information I have on my screen, I didn't find any non-directional trade, and I did not find any directional trade either. Okay, so I could certainly rerun both of those scans, the directional long, let me say that again, directional short, and the non-directional. Okay, I do have a bunch of trades that could be valid for neutral. Okay, those could be valid, especially the ones here with Amazon, Ron. So those could be okay. but also I have the directionals here. And since in recent times I've been planning more credit opportunities than debit opportunities, just from an educational point of view, if you wish, I think that it should be more interesting to you guys to see me do a debit spread if we were to find such opportunity. Okay, so Roku is right here. We have it already, so I'm gonna pass. The next one in the list is CrowdStrike Holdings. So let's load that chart and see what happened. Actually, since I'm running two scanners at the same time, and those scanners are downloading data, we may see my charts loading slowly now. I actually didn't think about it. It's not the best idea. But anyway, so great probability, 51.8. That's very strong for a stock. But problem, 10 out of 7. So the climate is a bit overextended. So I'm going to switch to Beyond Meat and see if that other stock is giving me a better climate. Okay, very good. So the climate is very good. Okay, so the climate, if we start here, you can see it's 1 out of 6. Okay, thick, confirm. So that's good. Okay, probability though, we got 44%. That is very disappointing. What if we look at pre and post market? 44 becomes 41. Not good, not good. So we're gonna have to pass on Beyond Meat, and we are moving to Zillow. So looking at Zillow, always very picky, guys. Always very picky. Always healthy, skeptical mode. So we got 8 out of 8. So if we were to enter today, it's still okay. Now 36%, it's absolutely not acceptable. But what about regular session that is providing 47? Still not acceptable. Lots of, it's interesting to see how some stocks that got better probabilities earlier in the year are now having less probabilities, and you can see better probabilities on other stocks, which is showing you where the institutional money is going. Okay, so let's go ahead and look at PTON. So at 48%, that's not good enough. What about pre and post market? That is loading. Okay, again, 52%, that's valid. Okay, and from a probability point of view, we got 5 out of 7. So that's a valid one. Okay, that's a valid one. Okay, so we got 52% with pre and post market. Notice in this particular case, we got a better probability if you were to use pre and post market data instead of regular session data, which is kind of a little insight. Okay, it's telling you that the large trades for that stock where there is more institutional interest are done when the market is closed, actually during pre or post market hours instead of during regular session times. They may be using those times to close trades, and they may be using pre and post market to enter trades in this particular case. Okay. So what are we gonna do? Well, let's see if a trade is doable. And guess what, my friends? I believe we do have a trade. We do have a trade set up here. So let's work on that. I believe we have time until the end of the session. So let me explain the whole thing. So first, climate, confirm. Second, we've been in this climate for 5. Third, statistics suggest 7 is a normal thing to happen. So 5 out of 7. So entering today or even tomorrow or even the day after. So we got 3 days in front of us where entering is fine. Okay. Now entering at what price is fine? Well, entering around 124.63. Okay, which is right below this UFO. Okay, now 2 comments. Price is currently trading at 136, so that's $10 higher. Okay, so for the market to fall to 126, okay, we need a $10 drop on a $130 stock. This is like, I don't know, like 8% drop or something like that. So could that happen in one day? Yes. Is it likely? No. So are we likely going to get filled today? No. Okay. So what if it's tomorrow? Well, if it's tomorrow, what's going to happen is that we're going to have an update on the EMA. And because the market keeps going higher, the EMA tomorrow will tick up. Okay. And maybe instead of 124, it's going to be 125, 126. And guess what? Now we're going to be perfectly aligned with the UFO. The UFO is going to be enveloping the EMA perfectly. And that's going to help for us to have a healthy entry into this trade. Okay. Good. So let's say we get into this trade. Let me maximize the daily time frame. If we get into this trade, where should we set our target? And this is where we turn on AutoUFOs. Now, again, it's looking like that stock it's going to the moon, and indeed it is. It's making all times high. This is a monthly time frame. So because there is nothing above price, in this case, we cannot use the UFOs to set a target because we are stepping into uncharted territory, like the case with Roku. And what's the beauty of entering those stocks that are making or about to start making all-time high? Well, the beauty is that potentially you can make a lot of money. Could be that the whole S&P changes direction and you don't make all that money, but potentially sometimes you will have those breakouts that just keep going and going because really you are stepping into uncharted territory and therefore there is no known resistance to man to stop that price from going higher, and people keep buying into it, right? So we want to expose ourselves to that particular opportunity, and to do that, really, this is the simplest trade of all, because we're just going to buy a call. Okay, in a normal case, you would do a spread, but first of all, PTON is not a liquid stock, and not being liquid, doing a spread would probably hurt you on liquidity problems. But on top of that, you would cap the potential for profit, like with Roku, where it went all the way, $100 higher or more. Then with a spread, you would cap that profit. So we're just gonna buy a call, okay? And for you to know which expiration date to use to purchase the call, we want to look at the earnings date, okay, which is February 3. And in a perfect world, we would have something around February 3, and what we have is February 19. So that's the expiration date that we're gonna use to buy a call. Liquidity is not so bad, like 35 cents of spread, not too bad at all, actually. And therefore, we're going to go for it. Okay, now, given the fact that that stock has a price for the options of $17, that means that the risk per call is going to be, around $1,700 if you were to do it at the current price, which is not going to be like that. It's going to be less. But still, notice that the implied volatility on that stock is 72%, and that's a very high implied volatility, meaning there is a huge expectation for movement. And therefore, that's making the options a bit more expensive than what they should. Now, the scanner is still reporting that opportunity as valid, and therefore, we are meeting our rules, even though these options are not cheap. They are not expensive either, based on the analysis done by the scanner. Okay. So what are we gonna do? I'm just gonna right-click anywhere, okay, to analyze and buy a call. Okay, so it's gonna be a single option, which is gonna be a call. I need to adjust the strikes and everything else, okay? So right now I'm using the 135. It's not the one I'm going to use. I just picked randomly. And what I want to do is basically, normally, when I do non-directional trades, I would set up plus and minus one standard deviation. When I do directionals, I would actually come here and type a number, right? Like 200, for example. But in this case, there's nothing to type. There's nothing to select either. Why? Because we don't have a target. The only thing we're gonna do, like Roku, we're just gonna follow price, and as new UFOs form, set those alerts along the way as the market is going higher. So the only thing I want to set really is my entry price. Okay, that's the only thing I want to set, because my entry price will help me to adjust which strike, which call is the one I'm going to use. So when I look at that UFO, notice that the top price of the UFO is 126.76. Okay, 126.76. You see that? Okay, 126.76. And therefore, this actually I typed it in the wrong place. I wanted to type it here. 126.76. Here we go. And here we go. And therefore, what I want to do is I want to look at my options breaks. We'll start with delta and see what happens if I was to purchase the 135, what my delta would be. And my delta is 48, which is way too much. We need to find deltas of around 30. So I'm going to move to 140, okay? And that's still giving me 43. So what about 145? That's giving me 38. What about if I look at 150? That's giving me 34. That is better now. What if I do 155? That is giving me now 30.95. Now, the 155, okay, it's an option which is all the way here on the top. Okay, it's an out of the money option, but again, we are giving ourselves time. We are betting on a breakout. Okay, and if that doesn't happen, so we'll have to talk about trade management, and that's why we'll be conducting sessions here to talk about this, assuming that we get filled on this trade. So the 155 strike is the one we're gonna get. Notice that the expected value for that option, once the stock drops from the current price, which is 136, to the entry price, which is 126, the expected price for the option is 656. Let's call it $700, and therefore the risk of this trade is $700. So it's not 1,700 as we saw earlier. As I told you, it's much less, even though it's still on the pricey side. I like to give you trades which are let's call it cheaper, because for practice purposes, it's a better one. To make money, the more expensive, the better, actually. But for practice purposes, if you are in learning stages, probably it's a better choice. Okay. In any case, that's what we have, and that's the trade that we found. And therefore, what I'm going to do is I'm going to place an order to trade. Here I'm going to go with market. You should not do it with market because you're going to get slippage. So again, it would be better to set an alert and then you get to do the trade manually. But if you were to automate it, it would look something like that, where you set an activation rule, and if the price of PTON goes to less than or equal to 126.76, okay, if that was to be the case, so you will want to buy one of the 155 calls. And when it comes to duration, okay, I would select good till date, okay? And you could go ahead and make this to be a date for tomorrow. That could be one pretty efficient way to do it. My favorite way to do it, actually, it's to use day orders and use alerts, okay? So I would not exactly do it like that, but I'm just doing it like this, so you get to see at least a portion of the execution. Because the way to do it is to set an alert and execute only when the alert triggers, which is likely going to be either tomorrow or the day after, not today, given the fact that the current price is 136.45. Okay, so but this would be the trade. Okay, and then you would click yes, and now the order is in the system. Okay, so you have the order there. By the PTON call is there waiting to get filled. The order is received. Okay, so we have it there. But again, make sure that you understand that the entry price would be right there. Let me go ahead and adjust the line so we can review this trade in future sessions. 126.76. Okay, that would be the entry. I'm just going to have a vertical line to today's candle so we know when the trade was planned. And I will add PTON here on the list. So then we can go ahead and review that in future sessions. Okay. Anyway, my friends, I believe that this is taking us to the end of the session for today. Mark, how are you, my friend? Good to see you. Could we also do 2 contracts and put in a safety target too? I will not do that, Mark. If you want to do something like that, what I would do is when you get to what you would define as a safety target, because we were not going to use stops on this trade, right? The most you can lose is the price of the option. So that's your stop, right? You may get to see that stock come to your entry. Okay, you buy the call, it costs you around 700, and instead of going your way, it may drop all the way here and then comes back up and you end up in profit. Okay, why? Because there is no need to stop yourself out somewhere here. Why? Because the most you can lose is limited by the premium that you pay for that option, which is going to be 600 over, close to $700, correct? So my approach will not use stops, and therefore defining a safety target, then you will need to tell me how you're going to define that location, okay? But let's say you said, okay, look, if he gets here, I want to, get rid of one of the options, okay? And instead of buying one contract, I buy 2. So I would say that a more efficient way to do that is, instead of getting rid of the option, getting rid of one option, what I would say, a more efficient way to do it is to short X amount of shares at that price. Because now you get a negative delta against your positive delta that will have the same effect, but you remain positive gamma with the whole thing. meaning that, okay, if the stock keeps going down, your calls diminish the speed of pain, while your short shares don't diminish the speed of profitability to the downside. So you would actually make money on it. And if the stock was to continue rallying past your safety target, the short shares would hurt at the same rate all the time, but the positive gamma would accelerate the speed of profitability of your calls. So you would also increase the profits on the way up. Where if you close one of the contracts, you just remove the contract and that's it, end of the story. So you would not benefit from a dynamic hedge. You would just be out of one contract. Okay. So, I mean, with futures, Forex, stocks, certainly it makes sense. With options, I believe that using hard deltas against soft deltas is much more intelligent, as we have discussed in some sessions that are recorded on the sharpening playlist. Okay, so for the curious of you out there, guys, go ahead and take a look at some sessions where you will see the title of gamma, okay, or hedging, and those videos may be enjoyable to you guys because they talk about that. Okay, very good, everybody. My friends, it's a pleasure as always to spend time with you here in the sessions. Just looking at the chat box for the last time, it seems that all the questions have been answered. Thank you so much for joining me. As I was saying, always a pleasure. You guys may start taking a little bit of time off as well as the holidays are approaching. So I'm going to start saying Merry Christmas in case you are taking time off soon. And I don't see you until after the holidays. I'll be here. I'll be trading throughout the holidays and the change of year as well. So feel free to join me anytime, as well as all my other colleagues and friends in the channel and everything we do, guys. You guys take care, stay safe, enjoy the time, be safe out there. Unfortunately, many cases of COVID are increasing very, very heavily in many countries. It's really not fun. And just make sure you make it a priority to be safe, to protect yourself, because by doing that, you also protect others. Okay, I really hate it when I see people not wearing a mask, because it's not about what it does to them. Is that if they get it, others get it. Especially now that many people will get the vaccine. Keep in mind, I'm not a biologist, but keep in mind that the people with a vaccine in them means that they carry the body, they carry the virus with them. So they, I don't know what level, because again, I'm not an expert, but there may be a bit of excess of contagiousness, if that is a word. And everybody be safe, guys. Maybe I'm making this comment too long, not being an expert, but really, we want this to end and go back to normal lives, isn't it? You guys take care, everybody. See you soon. Bye bye.